Whoa, what a brutal day in the markets yesterday. But that's not the reason why I'm wearing black today. I'm wearing black today because I found a newly developing chart formation in the semiconductor index that nobody is talking about. But if this formation triggers, we're going to see a major, and I emphasize the word major, correction in the chip stocks. You have to see this. Well, welcome to Hot Trades of the Day, your daily show that focuses exclusively on swing trades and trading ideas for the coming days and weeks. My name is Daniel Wilhelmi, head of trading here at Bull Markets Lifestyle, and no time to waste about the blah blah intro. Let's jump right into it because what I am about to show you will blow your mind. I couldn't believe it when I saw it, and it's a major warning sign on the horizon for the oh so popular chip stocks, Nvidia, SMCI, Broadcom, you name it. Boy, take a look at this. What you see here is the Philly Semiconductor Index, the so-called SOX. That's the benchmark for the chip stocks. And look at this. There is a head and shoulders pattern forming, and it is already, with yesterday's breakdown, reaching the advanced stages. Now, it hasn't triggered yet. It triggers when it breaks that blue line, which is called the neckline. But it is in advanced development, and this is a major, major warning sign that there is a massive downturn in the chip sector on the horizon and coming, and that makes sense if we get a correction in September. And that clearly is the reason why the QQQs, why the Nasdaq Composite was not able to reach new all-time highs in the last weeks in August. So I don't know why nobody's talking about this formation yet. Well, I know why nobody's talking about this formation yet, because the institutional investors still need to unload their chip stocks to the dumb retail investors that are not paying attention to what's really going on in the markets. But you will hear about this formation soon enough if the prices get down to the blue line and break below it. And what's beautiful about head and shoulders formations, now this is a very, very bearish formation if it forms at the all-time top, which it has. If I draw this out, you can see clearly it formed at the top. Now this is as bearish as it gets. You can calculate the downward potential that a head and shoulders will create when triggered. And you measure the highest top of the head and you drag it down to the neckline and you come out to around 27%. So that is the downside potential. Now, you take the neckline, you drag it down, 27, 26, 25, somewhere around there. And look where this leads us. Right into this massive support zone that goes all the way back to 2021. That would make absolute sense that the market would go down there if triggered. Major warning sign. You heard it here first. Head and shoulders forming in the semi-space. Now, this is not the first head and shoulders that has formed in the semi-space. Look at SMCI. Way before anybody was talking about the downtrend, the red downtrend that you see here, we saw a head and shoulders forming in February, March. Clear as day if you were paying attention. Here was the neckline, the blue neckline. Not as nice as it is in the SOX, And then look what happened afterwards. A complete breakdown in the stocks, actually exceeding the downside potential that you would calculate from the head and shoulders, probably because of the Hindenburg research problems that they're talking about in the accounting and everything. But the same way that Supermicro was a leader in the rally up, it's now a leader on the way down of the chip sector. And it also has shown this head and shoulder formation. Now, not every chip stock is showing it. Let's take a look at Nvidia, for example. No head and shoulders here, but clear as day, you can see there's a downtrend and we broke the 100-day moving average. Now, it's not confirmed yet, but if we go back in history, that's not a good sign. Because the last time we broke the 100 and stayed below it was 2022, and look what happened afterwards. We had a big downtrend. That was the big correction phase in Nvidia. We had a short run right here last year, but that's neglectable. So, would I short Nvidia? No. You don't want to step in front of this train. But here at Hot Trades of the Day, we are looking at actual trade and swing trade ideas that you can use today or very quickly. And that is Qualcomm. Look at this chart. Oh, this is beautiful if you're a short seller. No head and shoulders either. I mean, you could make a case, but it's not really a case where this would be one shoulder, this would be the head, this would be the second shoulder. I guess it could work, but it doesn't even matter in this case. Because what are we seeing here? Look at this. The uptrend from November 23rd, the long green line, clearly broken. 100-day moving average, clearly broken. So, downtrend. Now we have a consolidation phase. If you're familiar with the ABC concept, this is the B wave. It was a triangle. And you can see yesterday we broke below it. Viciously too. So, I would look for prices around 169, 168. If the price of Qualcomm goes back up there in like a short-term move back up and then turns down on the hourly chart, that's where I would short Qualcomm. This stock looks really, really bad. But what I actually wanted to talk about before I found this crazy head and shoulder pattern that is really bearish if it's triggered in the stocks was the grains. So I want to leave you with a quick look at wheat, and we will talk about this more in tomorrow's show. You really should not miss this. Look at wheat. This looks beautiful. This looks beautiful. Look at this. The downtrend from the summer broken. A nice base formed, and now it broke above the resistance yesterday. It's confirming it right now. This is a clear breakout. This is, if you're asking yourself, man, where can I invest right now? Well, look at the grains. Soybeans are going to show it to you tomorrow. Looks excellent as well. Corn has already jumped up, I think 10% or so in the past week. This is the market, but right now, for all the people that are the Nvidia believers and that are loving the chip stocks, stay away. Don't buy the weakness. So that's it for today. Have a great trading day. And remember, you don't need to be in every trade. You just need to be in the right trades. And don't forget to enjoy life. We only have one. See you tomorrow. And then we're going to talk about the grains and the chances there. Bye-bye.